If you're self-employed and your tax bill feels insane, not kind of high, not unexpected, but just insane, in this video, I'm going to walk you through exactly why, with numbers so simple you can follow along in your head. Most people don't realize this. Employees and self-employed people are taxed using two completely different systems. Same money, very different experience. That difference is why the bill feels so brutal. Let's lock in one example. You're self-employed, your business makes $60,000. This is profit after expenses. No tricks yet, just clean math. Here's how the $60,000 get taxed. First layer, self-employment tax. This replaces payroll taxes that employees split with employers. The rate is 15.3%. You multiply that by 60,000, that's going to give you $9,180. This comes before income tax. Employees don't see this number. They only see half of it because the other half is hidden. Self-employed people see all of it. Here's where most people panic. They think, okay, I paid my tax. No, that was just payroll tax. Income tax is still coming. Now add in federal income tax. After deduction, your taxable income might be about $45,000, depending on the tax bracket. Federal income tax might be around $5,000 to $6,000, let's say $5,500. Now your total federal tax look like $9,180 for self-employment and then $5,500 for income tax. Total $14,700. That's about 25% of your profit. This is a moment where people say, I feel robbed. And here's why employees don't feel it. Employees, they pay a little at a time. Every paycheck, they have income tax withheld, payroll tax withheld. So the pain is spread out. Self-employed people, nothing is withheld. So instead of I barely notice it, you get, why do I owe 5 figures? Same math, different experiences. Now let's talk expenses. Say you had $12,000 of legit business expenses. Your profit drops from $60,000 to $48,000. That helps. But here's the part people screw up. $12,000 expense do not save you $12,000 in taxes. If your combined tax rate is 25%, that expense only save you about $3,000. Expenses help, but they do not make all of your taxes disappear. Here's the part that nukes people. Self-employed taxes are due quarterly in April, June, September, and January. If you don't prepay, the IRS charges penalties even if you pay in April. So when people say, I did everything right and still got penalized, this is the reason why. First year self-employed is the hardest. No withholding habits, no estimate rhythm, full payroll tax exposure, big bill. Year 2, much easier, not because taxes change, because you learned the system. Self-employed taxes feel high, not because you're being punished. They feel high because you see the full cost at one time, without any employer buffer. Once you see the math, it stops feeling random. If you're self-employed and you're shocked by your tax bill, you're not dumb. You're just new to the system. Subscribe if you want tax explained with real numbers. No hype, no shortcut, no TikTok nonsense.